Look at the beast Apple, $624.33, $502.65. That's nearly $1,200 that were made. And if you're seeing this and didn't know about what we were doing in Apple, comment below, YouTube, stop playing. Because YouTube has to pump out this video so that y'all can get your money. Because people are making money very quickly here, and we don't want y'all missing out on the opportunity. With that being said, welcome back to Financial Freedom Builders, where every conversation moves you one decision closer to financial freedom. If you haven't already, hit the like button, subscribe to the page. Top comment below, get you access into Freedom Builders Academy. This is where the education and the magic is happening. People are being educated to learn how to invest, and then they're turning around and leveling up with opportunities just like the one we're talking about today. While you're at it, hit the notification bell so that you're alerted every time we drop this video. Because if you're not alerted when we talk about this, like we talked about Apple in our previous video, I will leave that box here. We talked about what the opportunity was, where it was above 281, we're bullish, and then below 269, we're bearish. And so once it got below 269, the alert was triggered, and our community, Financial Freedom Builders, jumped in on the play and rolled the puppy all the way down, and people were making serious money. But the good news is we are not done with this trade in Apple. So let's just talk real quick before we get into that. I'm going to show you guys a chart. We're going to talk about Apple a little bit, but I want to talk a little bit about what's going on in the market. Why did the stock market sink? This was largely in part due to earnings and jobs. In the comments below, write the words earnings and jobs. That's what it all comes down to. Right now, the market is not certain that we are seeing companies showing projected strength. One particular sector that continues to have a lot of ebbs and flows is the software industry. With AI being in the forefront, everybody's buying all these AI chips and all these things. We need more data. We need more storage. So these software companies have to buckle up, not have a supply chain shortage so that these companies and consumers can continue to pump out and generate all of the money that's being spent into AI. So with that being said, the market has shown a pullback. In addition to that, this labor market and with inflation flavored on top of it, there is true uncertainty about where things are going with the job market. Yes, we increased the jobs in January. Great. But overall, we eliminated 862,000 jobs over the last 12 months. And if you've been laid off over the last 12 months, I'm here to tell you that you are not alone. There are a lot of people out here struggling financially, and they're trying to figure out how they're going to make ends meet. But this is why we created this page, and this is why we created Freedom Builders Academy, because we needed you to have another path to get to your goals without having to depend on the government or a boss or a paycheck to get you where you needed to be. So with this information, what are you going to do about it? Now, what I'm going to do now is I'm going to share the chart, and I want to go right into Apple because I want to mention is that we talked about this in the last session where you see here the chart with a trend line on the top and the bottom here for Apple. This represented the zone in where it was touching Apple over the last several weeks, going into the last few months in total, okay? And so once we got up here last week, we saw Apple show very strong momentum on the weekly chart. This candle represents 1 week. This was last week's chart, pushed right up until the top of the trend line. And what we said was in a previous video that we are risk off until we see this continue to break above this line, which was $281. Otherwise, we are going to assume that this channel and this candle is going to remain within this range or this room, as we like to say in our Financial Freedom Builders community, okay? Which means that if it bounced off of what will be the proverbial ceiling, then the ball would have to go further back down into the room, which is what we've seen here in this particular week. Apple bounced off the ceiling and it's working its way down. But what you got to realize is that with investing, you don't only have to make money when the market's going up. There's ways to make money in the market going up, when the market's going down, and when the market's going sideways. There's always an opportunity in the market. You just got to understand where you are in the market and what strategy or tool you need to take out. So when you got something broken in the house, is it the hammer? Is it the saw? Is it the drill? Right? all of the different tools are available to you. You just got to know which one you're using for the particular situation to fix the problem in the home. So now we see the ball bounced off the ceiling and the ball kept going down into the floor. Okay. It's heading towards the floor. Now, here's the thing. The first thing is we want to realize is, okay, how far down can the ball bounce in that room? Well, from the ceiling, we see that if you follow the trend, okay, I'm going to put a trend line here just so that we can follow it. The ball could essentially fall all the way through this zone right here, okay? So if you do the coordinates here, that puts you at about almost around $249, $250. So this ball could fall all the way to 250 with Apple before we, and again, the keyword is should, see a bounce back to the ceiling. However, it doesn't mean that it needs to get all the way to the bottom of the floor for the ball to bounce. There is a key term today that I'm going to teach you today, which is called the exponential moving average, or in layman's terms, the EMA. So if you're watching this video and at the time of this recording of this video right now at this timestamp, if you heard the acronym EMA, put this in the comment because you are the one that are going to win the sweepstakes when it comes to this investing journey. Apple fell right here, which is this line here, on the 100 EMA, which is 259.45. So think of it this way, and this is the best way I can explain to you as an analogy. I'm going to slide this way, and this will make sense over here. Pretend the ball bounced to the ceiling, right? And then it fell all the way to the floor, and then it will bounce back to the ceiling, okay? That represents the room. What the EMA is the ball hit the ceiling, but before it hit the floor, it hit the dresser in the room. So the ball never touched the floor, but because the ball hit the dresser in the room, the ball still bounced back up, even though it never hit the floor. So that's what the EMA represents, another potential area where the ball could bounce. So I'm going to zoom in now. Instead of the weekly chart, I'm going to go into the 30-minute time frame, and I'm going to show it to you via a chart. The ball came up, came down, kept falling, kept falling. But if you've been watching our videos, we talk about the wick. The wick of the candle represents that the selling or buying pressure, depending on which way it is, the selling continued, but at around $260, the ball or the buying pressure was picked up and brought the body back up. So the selling came down here, brought it back to this line, and now it's sitting here in the 1 hour time frame chart, right on what we are calling on the weekly, the dresser in the room. So if the ball stays here and can find its way pushing back up, then this represented not the floor in the room, but the dresser in the room. So what does that mean? That means that the ball could bounce back to the ceiling and could get back up towards 280. Or it could hit this part of the room, just like an analogy of the dresser. It can start working its way back to the ceiling, but because it didn't get the floor, there wasn't enough gravity to bounce enough from the ball hitting the floor because it's not stopped by the dresser. So the ball bounced somewhere on the way to the top of the ceiling, and then it worked its way down, and maybe the next time it may not touch the dresser. Maybe the next time it goes straight to the floor. So if you can follow that analogy with the bouncing ball in the room, the ball bounced here, came back down, but it hit the dresser. We don't know yet if it's going to go all the way back up, if it's going to go semi up and work its way down. All we know is that it stopped here and it didn't go to 250 because it had a pit stop around 259, $260 or so. And right now the ball is sitting here. And so if you can follow the trend in the ball in the room, you'll know what you need to do with your investment strategies. Now you're saying to yourself, man, I have never understood investing in such a simple way. How can I get more information like this? Again, top comment below gets you access into Freedom Builders Academy. We simplify finance in a way that's easy for you to understand so that you can apply the information, put it into action, and start leveling up and actually moving further into your journey to financial freedom. But the question is with this information, the content you're receiving, and on this page, what we're teaching you, what are you going to do with the information? Till then, we'll talk to you on the next one.